We've all heard of industrial real estate companies like Prologis, but we're going to dig into one that you might not have heard of today. Before we do, please take a minute to check the link on your screen. You can get the top 10 stocks to buy right now from our sponsor, The Motley Fool, and it's the best way to support this work we're doing. So, Tyler, one of this company that you kind of brought to my attention is called Rexford Industrial Realty. I'm not terribly familiar with it. The ticker symbol is REXR. It's an industrial REIT, which has been a very hot sector of real estate. These are things like fulfillment centers, warehouses, things of that nature. And Rexford's properties are mostly based in California, which I've generally gravitated toward the Sunbelt markets and things like that just because of the higher growth. So I probably the big reason I ignored this stock. But kind of give us just kind of the overview of why this one kind of crept on your radar lately.
Yeah, it's one that I've been following quite a bit, and the reason is it's so hyper focused in a market that's extremely attractive for people that are good operators. The Southern California industrial real estate market is one of the largest industrial real estate markets in the world. It's larger than Germany's in terms of total square footage, and in terms of I think it's actually even larger than like New York City, Atlanta, Dallas, all of these combined. It's one of the largest footprints, in large part because you have the Long Beach and Los Angeles ports, which are two of the biggest West Coast ports in the United States, and they handle a lot of inbound, outbound cargo. So Southern California, so we're talking like LA, Orange County, all the way down to San Diego, this entire region, massive industrial real estate market, but it's a shrinking one. And that's what makes this kind of uniquely compelling, is that because of infill, because of all the things of a growing population in a relatively land constrained space, you got the mountains up in towards the east and to the north, and you're trapped by the ocean. There's only so many places that industrial real estate can go, and so it makes each incremental square foot in the area that much more valuable. And that's where Rexford comes in, is they specialize in this area. It's like they acquire a lot of properties specifically in this area, a lot of like off-market transactions, because they know the market really well. They know what's coming up for sale, or maybe they can make a good offer on things. And that combined with that infill means that your rental growth rates are spectacular. You and I, we've talked about industrial real estate being one of the most attractive markets in terms of rental growth. Well, Southern California has been even better because there's basically no vacancy. According to Rexford, the vacancy rate across its markets, which again, LA, Orange County, San Diego, it's less than 2%, which is considerably better than the rest of the market nationwide. And because of that, it has been able to put in incredible increases in rent over time. And I wanted to point this particular one out because I think it really goes to show investors, or how do I want to say this? It really goes to show people how much this is remarkable. It's that over the next 2 years, basically, if Rexford does absolutely nothing, what they're saying is that because of embedded market, because of its redevelopment platform, and if there was no growth in the market whatsoever, they expect over the next 2 years that their net operating income is going to increase by 31%. Mark to markets, basically meaning, when they bring new leases back up to market rates, when they release them, they have 50% growth on those. Some of their redevelopment things, their yields on those are looking very attractive, about 6.4%. And, a couple acquisitions here and there, and then some incremental growth on its existing leases. So again, this is if absolutely nothing happens. They don't make another acquisition. They don't increase any more, market rents across LA for the next 2 years, don't increase. They're already looking at 31%. And this has been a trend for this company for quite a while. For the past 5 years, they have grown their dividend by more than 20%. And yet, as you mentioned, I think at the top, real estate has been kind of a weak market. It's pretty much flat for the year, Rexford's actually down 3% year to date compared to the rest of the market, and right now has about a 3% dividend yield. Now, we've talked a little bit kind of in other videos and things like that of like, look, if you're going to have a dividend that's pretty low right now, it needs to show growth. And Rexford has been one of those unique places where the dividend growth has been so spectacular that it's actually okay to get that lower yield if you're looking for a long-term total return. And for me, this has just been one of those companies that's undercovered, underappreciated, and sure, yeah, like leverage and things like that, and changing of interest rates is going to be a headwind. But the specific LA market has been so good that I don't see it changing monumentally over the next few years.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by nearly 4 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 504% as of September 8th, 2023, and are measured against the S&P 500 returns of 130% as of September 8th, 2023.